Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today hire purchase system. So what is hire purchase system? We know purchase, right? We are purchasing when the goods are required. We are purchasing, and we can purchase in two way. One on cash basis, another one is on credit basis. See here, under hire purchase system, you are purchasing the any machinery or asset on credit basis. You are not purchasing on cash basis. See, because you need to meet your demands, you are not able to pay the cash immediately. We will go for an installment system. So that is called hire purchase system. See here, it is an agreement between the two parties. Who are the now here we have an hire purchaser, right? So when purchaser is there only we can sell it. So that's why he is called as hire purchaser, the person one who purchased the assets. Okay, for him it is an asset. And he is purchasing, from whom he is purchasing? The person one who sells the asset, no, he is called as hire vendor. Hire vendor, that is seller, one who sells the goods. So here he is selling, example, a machinery. For him it is won't be an asset or not, but for an hire purchaser it will be an asset. So what is the main difference here? See here, he will get possession of the goods immediately. Possession of the goods immediately. So possession means he can use the goods immediately, but he won't get the ownership of the asset. Ownership he will get once he settle the final installment, last installment. Now here we will see the example for how he is making the payment. Here he will make payment in two ways. One, cash he will pay, another one in installment he will pay. Okay, how he will pay cash? See, when purchasing of an asset and when agreement is taking place, you need to pay some amount. That initial payment we will call it as a down payment. ಅವನು ಇನಿಷಿಯಲ್ ಅಲ್ಲಿ ಎಷ್ಟು ಪೇ ಮಾಡ್ತಾನೆ, ಏನ್ ಪೇ ಮಾಡ್ತಾನೆ, ಅದನ್ನ ನಾವು ಡೌನ್ ಪೇಮೆಂಟ್ ಅಂತ ಕರಿತೀರಿ. ಅದಾದ್ಮೇಲೆ ಉಳಿದಿರೋ ಅಮೌಂಟ್ ನ, the remaining amount is going to pay in installment. Now example, here suppose the cost of the machinery was 70,000. Okay, out of this 70,000, 20,000 he made down payment. He paid at the time of possession, getting the assets, right? The remaining balance was 50,000. Remaining balance was 50,000. He said he will pay 50,000 in 5 months. In 5 months. So that is 5 months is 10,000 is paying every month. 10,000 is paying, right? 10,000 into 5, 50,000. The 50,000 is paying in 5 equal installments. But the owner, the hire vendor said, no sir, I have given you one time to pay the amount. Pay me instead of 5 months for 6 months. 6 months kodi nange anda. So how much you are paying? 60,000 you are paying. 60,000 you are paying. What? How much you have already paid as a down payment? 20,000. What is the total amount? 80,000. What was the cost of the machinery? 70,000. So how much excess you have paid? 10,000. This 10,000 is called as interest. The extra amount whatever you have paid on your purchase on installment. Okay, this is your interest amount. So this you are paying in 6 equal installment. 6 years you are paying. Okay, 6 years you are paying. Now, here one more point you need to understand. It's very important. He paid 3 years continuously. There was no issue. In the fourth year, he became defaulter. He was unable to pay. Immediately the higher vendor can take repossession. He can take back the asset. He can take back asset and is not going to repay the amount whatever you have paid for these many years. ಇಶು 3 ವರ್ಷ ಏನ್ ಪೇಮೆಂಟ್ ಇರ್ತೀರ ಅದನ್ನ ರಿಟರ್ನ್ ಕೊಡಲ್ಲ. ದಟ್ ವಿಲ್ ಬಿ ಕನ್ಸಿಡರ್ಡ್ ಆಸ್ ಅನ್ ಹೈಯರ್ ಚಾರ್ಜಸ್ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ತಾರೆ. Okay, so this is important point. Here we have understood there will be a two-person higher purchaser, higher vendor sells the goods to the higher purchaser on installment basis. Here the higher purchaser will have a possession on the goods but not a ownership. Ownership he will get at the last installment. Once he have paid, then ownership will be transferred. Okay, with principal amount. Here the higher purchaser will pay the interest amount also. Now we will understand how we are passing the journal entries for this higher purchase system. So we have understood the golden rule of accounting under traditional approach and modern approach, the rule of debit and credit. See, use always old is gold, golden rule of accounting. That is best. So, but whichever is you feel comfortable, that one you can use. Now we will see the case. What is the first situation? The first situation is transfer. Transfer of possession, not ownership. So you can't incomplete the word. Okay, you need to complete it. Transfer of possession. So when transferring of possession in the books of higher purchaser, he is receiving the asset, right? So asset are coming in. Asset is an real account, right? So debit what comes in? So you are debiting asset account. Asset account debtor to, you are paying an amount to whom? For the purchase of asset? To the higher vendor. So to higher vendor account you are crediting. Higher vendor account you are crediting. And here he should be ready to sell. He is selling to higher purchaser. So higher purchaser will be a debitor for you, for the higher vendor. Debtor for the higher vendor. Okay, that's why we are debiting higher purchaser account, because he is not going to pay the cash immediately after the purchase. Okay, so that's why we are debiting higher purchaser account. Higher purchaser account we are debiting, and to high sales account we are crediting, because the asset is going out from the higher vendor. Okay, he is selling to the asset to higher purchaser. He is created is debtor. For higher purchaser, higher vendor is a creditor. For higher vendor, higher purchaser is a debtor. Okay, this is the first entry you are passing. Now what is the second situation? The second situation is, now see, here we have discussed, right, how he is making payment. He need to pay down payment, right? So for this down payment will pass an entry. Down payment. Down payment. The down payment he is paying to whom he is paying? He is paying to higher vendor. So higher vendor account. Here you debited. So here you are credited higher vendor account. So you here in the second entry while making the payment, you need to debit higher vendor account. He is receiving amount. Higher vendor is a personal account. Debit the receiver. So higher vendor account debtor to bank account. Always in business the transactions will take place through bank, so that's why we'll use bank account. Okay, cash transactions are very restricted. Okay, up to 2000 only they can go for a cash transaction, not more than that. Then here he is receiving amount through bank account debtor to higher purchaser. See here you have debited, no? Now you need to reduce is paid amount, half of the amount. So higher purchaser account you are crediting, higher purchaser account. Okay, for making the down payment. So this is the payment, down payment entry. The next one is, the third entry is interest. See, interest also we are paying. For here, one person the interest is an expense. For another person, interest is an income. Purchaser, higher purchaser, interest is an expense, is paying. For higher vendor, interest is an income. So first we will make the entry for due, interest due entry. Interest due entry. So interest account we are debiting because expenses we need to debit. Interest account debtor to whom we are paying interest. Higher vendor account. Higher vendor account we are crediting. Here higher purchaser account debtor. Higher purchaser account debtor to interest account. Interest account. Okay. So interest is an income for the higher vendor and he received amount from for the higher purchase from the higher purchaser. Okay. Next entry is payment entry. Payment entry. Payment of installment. Payment of installment. Installment. So to whom we are paying installment? Higher vendor we are paying, and the entry will be repeats. How many years you are paying, that many years the entry will be same, only the amount changes. Okay. Higher vendor account debtor to bank account. Bank account, and here he is receiving amount through bank account debtor. Debit what comes in through bank, amount is coming to bank account debtor to higher purchaser paid amount. Higher purchaser account. See here you have debited no the whole amount. That amount, how many times here you are debiting? If the crediting, the total amount will be equal to your debit amount. So that while you are solving the problem, you will understand. The next transaction is payment, providing depreciation. So he has purchasing assets, no? He need to provide depreciation for that. Providing depreciation. Here, only the higher purchaser is bearing the expenses, the depreciation expenses. So there will be no entry from the in the books of the higher vendor. No entry. Here no entry. Here you are passing an entry. So depreciation is a non-cash expense. Expense, right? So depreciation account you are debiting to asset account. For asset you are charging a depreciation, that concerned account you are crediting. Okay. So there will be no entry in the books of higher vendor. The next transaction is depreciation. You have opened the depreciation account. You need to close the depreciation account. Closure of depreciation. Depreciation you are closing by transferring depreciation to profit and loss account. Profit and loss account. Profit and loss account debtor to depreciation account. Here you have not created depreciation, so there is no closure entry also. No entry. No entry. The last transaction is closure of interest. We have opened interest account also, right? So that interest account also we are closing. Closure of interest. interest. How we are closing? By transferring to profit and loss account. So profit and loss account we are debiting, profit and loss account debiting, debtor to interest account. See here, you are debiting interest while closing you are crediting interest account. And here also you have opened an interest account, so you need to close. See here, you have credited interest account while closing you are debiting interest account debtor to profit and loss account. Don't use short forms, write profit and loss only, don't write P and L account. Okay, so these are the entries we are passing in the books of higher purchaser, higher vendor. See, there is a situation. First, you are getting a possession. ಸ್ವಾಧೀನ ಪಡಿಸ್ಕೋತಾ ಇದ್ದೀರಾ ಅಸೆಟ್ಸ್ ನ. ಓಕೆ, ಅವನು ಮಾರಕ್ ರೆಡಿ ಇದ್ದಾನೆ, ನೀವು ತಗೊಳಕ್ ರೆಡಿ ಇದ್ದೀರಾ. ಸೊ ಇಲ್ಲಿ ಹೈಯರ್ ಪರ್ಚೇಸರ್ ಅಕೌಂಟ್ ಡೇಟಾರ್ ಟು ಸೇಲ್ಸ್ ಅಕೌಂಟ್. ಹೈಯರ್ ಪರ್ಚೇಸರ್ ಗೆ ಸೇಲ್ ಮಾಡಿದಾನೆ. ಯಾಕೆ ಹೈಯರ್ ಪರ್ಚೇಸ್ ನ ಡೆಬಿಟ್ ಮಾಡಿದಿರಿ? ಯಾಕಂದ್ರೆ ಇಲ್ಲಿ ನಾವು ಕ್ಯಾಶ್ ಪೇಮೆಂಟ್ ಮಾಡ್ತಾ ಇಲ್ಲ, ಕ್ರೆಡಿಟ್ ಟ್ರಾನ್ಸಾಕ್ಷನ್. ಲೇಟರ್ ವಿ ಆರ್ ಪೇಯಿಂಗ್. ಸೊ ಈಸ್ ಎ ಫಾರ್ ಹೈಯರ್ ವೆಂಡರ್, ಹೈಯರ್ ಪರ್ಚೇಸರ್ ಈಸ್ ಎ ಡೆಟಾರ್. So debtor means asset, real account, debit what comes in. So higher purchaser account na debit madidri. Okay, here asset account debtor, asset is coming inside. So asset account debtor to higher vendor account. For that we are making payment to the higher vendor. Okay, higher vendor is a creditor for the higher purchaser. Down payment, while making down payment you need to make down payment to get the possession, right? So higher vendor account debtor to bank. Through bank we are making payment. So person who is receiving we have debited, and here he is receiving amount through bank account he has debited, and from higher purchaser he is receiving. Credit the giver, higher purchaser is giving amount, so he credited higher purchaser account. Interest due, for higher purchaser interest is an expenses because he is paying interest, and higher vendor it is a revenue income, right? He is receiving an interest. So interest account, here we are debiting, debit expenses. To whom we are paying? Higher vendor. Here higher purchaser is paying interest, to interest account we have credited, credit incomes and gains, right? So to interest account we are making installment payment. To higher vendor we are making payment, through bank we are paying. So higher vendor account debtor to bank account. Here he is receiving from bank, so bank account debtor to from higher purchaser, through bank from higher purchaser. Okay, so here we have purchased an asset. For asset you need to calculate depreciation, right? So depreciation account, depreciation is an expense, non-cash expense, we are debited, and for asset we are charging and depreciation. For depreciation we won't write any cash or bank because it is just a reduction in the value of an asset. I'll take separate class for depreciation and amortization. And here there is no entry in the higher vendor, so he is not going to charge any depreciation on asset. And we opened a depreciation account. Here we are closing a depreciation account by debiting profit and loss account and crediting depreciation account. Again no entry here. And we have already opened a interest account. Here we are closing interest account by debiting profit and loss account and crediting interest account. Here we debited interest account and credited profit and loss account. While making payment, here for higher vendor interest is credit, for higher purchaser interest is debit, for closing it is vice versa. Okay, thank you for watching. If you are not yet subscribed, kindly subscribe the channel. Don't forget to like and share. Have a great day. See you in next video.